morning, y'all, and welcome back to my channel. Thank y'all so much for tapping back in to see what I have to say. I promise y'all, it truly does mean the world to me. But with that being said, what we're talking about? We're talking about Quant Network, okay? We're talking about Swift in this video, and we're talking about Hedera hash graph, y'all. Y'all listen, do not sleep on Hedera. Hedera is one of those ISO tokens, and Hedera is doing incredible things around the world, okay? Follow me on this video. You won't be sorry. You know, Quant, don't get me wrong. Quant he's king. QNT, that token and what that network is doing and the strategic moves they're making is crazy. But Hedera, this is why H-bar is my number 2, because what they are doing globally as well, y'all need to wake up. They have a governing council member that sits on every continent. And understand what these governing council members are. They consist of people like literally LG, Shihan Bank, which is the oldest bank in China, Standard Bank, which is the largest bank in Africa, the Nairobi Stock Exchange. Then you have things like Mondelez International, which is literally the parent company of things like Chips Ahoy and Oreo, and literally it's like 50 different products. Look it up. I promise you, you will be shocked. You have things like so many, Hitachi. I mean, we're talking major conglomerates globally already. And what being a governing council member means, it means that they are running nodes for Hedera, the thing that makes Web3, which is the nodes being ran. Understand what this means. Hedera, the reason why they're not my number 2 is because they're tackling also enterprise. But like I said, I think Quant is more so like, huge, crazy things like a country and some enterprises and central banks and commercial banks. But Hedera is tackling your brand names, things like Oreo. Who don't love an Oreo? And I just found out recently that they're vegan. But anyway, I won't even go down that route. But follow me on this, you guys. Quant Network, Swift, Hedera, Swift, and now we have some news now that Swift has not just announced their 2025, literally starting their proof of concepts of operating in the realm of distributed ledger technologies, stable coins. Understand what this means moving forward. Do not have a retail mindset when it comes to this asset sector, because that's what this is. The distributed ledger assets you are holding is a part of the asset sector, just like the stock market is an asset sector. Understand what this means. You are an early holder of certain assets throughout this sector, and the assets that you're choosing to hold, if you are listening to my voice because you're holding things like a Quant Network, you're holding things like a Hedera hash graphs QNT. H-bar, QNT is Quant Network. You're holding things like XLM and XRP. You're holding things like IOTA or XDC. These networks that are facilitating global financial infrastructure in different ways. Understand what is happening right now with these ISO tokens. And now you understand, a partner like Swift. Swift connects to over 22,000 banks globally. And within the North American continent alone, it's like 11,000 banks. I'm going to say that again. Swift literally connects to over 22,000 banks globally. And in the North American continent alone is 11,000. Understand what this means when you have a player that big that literally is the banking infrastructure of you send this money here, we do our messaging system, and then we send this money there. And this takes whatever time it takes to get through the messages that this standard is. This is what Swift is. And now they are now announcing that in 2025, we are now starting the trials of things like stable coins. This is distributed ledger technology, people. And understand, when you have a thing called Hedera Con, and on the Hedera Con stage, you have a Swift representative talking about There's different things as far as their roadmap for 2025, talking about things like standards and interoperability, talking about challenges within the market. Follow me on this, okay? Because I got some heat coming for y'all, because Quant is great, Hedera is great. Don't sleep on neither, because they're both are laying infrastructure that are going to be around for a long time. Hedera has a 100-year roadmap. Think about that, okay? Follow me on this. But this first video, it's my boy Martin Hargraves. He is one of the executives at Quant Network. I know I always bring Gilbert, because Gilbert is, I'm just being for real. Like, that dude's resume is insane. Like, who has held all of those positions in a lifetime? Some people would have maybe held one or two of those positions. He has held literally, at this point, 20 or 30 positions, and some of which simultaneously he still sits in today. Like, understand who that man is and how powerful that man is. And for him to couple himself with a company and a technology that he birthed literally from a standard, understand, because this lady's gonna also talk about standards. Understand what this means when I be throwing y'all these gems. Understand this, okay? But this first video is my boy Martin Hargraves, one of the execs at Quant Network, talking about a hackathon that they did with Swift. Follow me on this, because we've also already tied to Gilbert to Swift earlier this year, because Gilbert put out a tweet and literally he was at Swift's headquarters, literally with his nameplate, Gilbert Verdian, Quant Network CEO. Follow me on this, but here we go. This first video, my boy Martin.
But Quant and Swift. Listen to this. Here we go.
At Quant, what we did last month, we were in a hackathon. We implemented SAP-P in its draft form. So the hackathon was run by Swift. For those that don't know Swift, all the banks in the world own it. It's got about 22,000 owners, and they provide highly resilient messaging services for the whole financial services industry. So the hackathon had two things. One was about custody. Didn't really care about that. The other one was about interoperability between networks. We do care about that. That's kind of what we do. The Quant piece on there is labeled Gateway, and SAP-P is how we connected these things. And this one was two different networks representing effectively a source and a destination. There's about 120 participants in it. BNY Mellon won it in the end because they throw a lot of money at it. We were joint third with NatWest.
Quant. Last month in January, they got this whole thing of payments 2025, adapt or get left behind. Was this a direct message to the likes of Swift and so on? I think so, because when we get further into it, in their update that's starting next year, literally like we're right here, banks across North America, Europe, Asia will embark on live trials of digital assets and currency transactions over the Swift. And I want you guys to see this. The ability to execute digital asset and currency transactions over the Swift network is moving from experimentation to reality. Starting in 2025, or in 2025, global financial institutions will have the ability to use Swift's global platform to conduct pilot transactions for the settlement of digital assets and currencies. Oh boy. I imagine what that could be. Maybe the regulated liability network, maybe the regulated settlement network. Yes, we already been there, done that. But the trials demonstrated how financial institutions can transact interchangeably across both existing emerging assets and currency types using their Swift connection. Currently, 134 countries are exploring CBDCs, and at the size of the tokenized asset market, their forecast is that Standard Chartered, and we know about Standard Chartered and Ripple and Standard Chartered and some of the other ones we talk about, I think even, XLM and so on, but it's to rise as high as 30 trillion by 2034. 91% of institutional investors say they're interested in investing in tokenized assets, according to a survey from Celent and BNY Mellon, which BNY Mellon, I believe, is in both Ripple and also Quant. We are investigating how interlinking capabilities can integrate emerging bank-led networks such as the US, yes, it says US, not Euro, regulated settlement network with traditional financial systems. Think about that, everybody. Swift has also recently been named as a participant in Project Agora. We know about Project Agora and Quant, a bank for international settlements led project exploring integration of tokenized commercial bank deposits and tokenized wholesale CBDCs on a unified platform. My God, Will. 11,500 financial institutions, and it talks about all of this, about the migration.
Now, my boy Maximus Crypto, the GOAT, the Quant GOAT, the person that does research like no other. That video was supplied by him. You heard Martin Hargraves? You heard what Martin Hargraves had to say? Understand what this means for things like as Swift starts to do their deployment into things like distributed ledger technologies, facilitating quadrillions of dollars in payments daily. Because we're talking about a global banking network. Understand what this means, okay? And follow me on this. Follow me, because all of these things are going to be tied to and ran by standards. And you have a player like Quant Network or like R3 Quarter that have been in years of developing global standards. And now you have a representative from Swift, like you're going to see in a second, on the stage talking about standards and how important they're going to be for the build out of the entire sector of stable coins and Web3. So everybody is on one accord. Not one accord as in one accord currency, but one accord as in one messaging system or over ledger that allows this seamless integration of this stable coin, whether it's RUSD or this stable coin, whether it is PayPal USD, or whether it's this stable coin that circles USDC. Understand what's truly happening right in front of our faces. And you have players now on the stage talking about things like making sure that this has to be done, which is standards. And who is the king of standards when it comes to Web3? And don't get me wrong, I know a lot of people will be like, when we talk about Swift, everybody go link this, link that. Don't get me wrong, I'm not a link hater. I'm not. I see the value of what Chainlink is doing. I do know that Chainlink does have something going on with Swift. I'm not refuting any of that. But understand what Overledger truly is, and how, like Gilbertian said himself, we also integrate interoperability blockchains. So it's not just the regular blockchains that you are building out, but we also integrate interoperability blockchains, like these blockchains that claim to be interoperable, or they're interoperable within a closed system, which truly doesn't make you interoperable. But I won't go into all of that. He said we even connect them. Understand what Overledger is, okay? Follow me on this. The global standard ISO TC 307. The global standard for building on blockchain that you have now had going on almost 9 years, and you have had the participation of 60 plus countries building out distributed ledger, literally standards. Follow this, okay? Follow me. And who is the king of that interoperability standard? Gilbertian, because he started it. Does he currently still work on it? Absolutely. He is literally over working group 7, which is the working group for interoperability. Think about that. I'm just saying. Follow me on this, y'all. I'm trying to, make all of us great in the future. But it just takes time. So follow me on this. So this next video, it is from Hedera Con, you guys. Hedera's going to be major. I'm trying to tell y'all, Hedera's going to be major. But on this stage, you have someone from Australia's Payments Plus, my boy Rob Allen. He's always on Shark Bites with the H-Bar Bull almost every single week. Check it out. It is so informational. The H-Bar Bull channel, so informational. Check it out. I swear, like, I'm not just blowing smoke up, yo, because if you see everything Hedera is connected to, it will blow your mind. I promise you. But anyway, you have someone from a representative from WorldPay. Understand what WorldPay is. It is just that. Processing and payments globally. Understand when that man talked later on in this video, and he talks about clients that do multiple transactions daily, like your Ubers and your Airbnbs. Understand how many transactions that is. Understand we're talking about hosting drivers in every single country. But follow me on this. This sector is going to be incredibly big, because if you caught some of my other videos, I've already showed y'all how the House just approved something like a 16 or 17 trillion dollar bill over the next 10 years. And understand that a lot of that is going America, however they say it first, as far as investments in infrastructure. Like I said in that video, what is the next layer of American infrastructure? It is technology. And that technology is Web3, what we call blockchain, but what the powers that be calls distributed ledger technologies, the sector that things like Quant and Hedera sits in. Companies bringing real world value that now is being coupled to companies that are already brand names. So as you continue to consume that brand name, you will indirectly be tapping into the networks that brand name is associated with based off of how they build out their distributed ledger technologies. Understand what mass adoption truly is. Most people aren't even going to know what Web3 is. They'll know it as an acronym, just like Web 1 or Web 2. But they won't truly know what it is. And if you understand in 2025 what's going on right now, and you really tap in, that's all I can say. Like this is insane. But here we go. We hop into this first video. It's coming from Hedera Con.
So delighted to be here. I'm Rob Allen. I'm the Hedera Governing Council representative for Australian Payments Plus. I'm delighted to open proceedings here with this illustrious panel. With me I have Ahmed, Sushil, and Elisa. And I'll, before we get into the questions, I'll ask them to just introduce themselves quickly.
Hey everyone, Ahmed Zivsaf here. I lead crypto partnerships at WorldPay. WorldPay is one of the largest financial institutions that processes payments globally. So think trillions of dollars in payment flows, 12% of global credit card transactions. My remit is primarily all of our on-chain activity. So everything from stablecoin settlements, stablecoin payouts, giving our merchants access to the latest in DeFi and sort of financial payment innovations is my entire world right now. So excited to be here and speak with you all.
So cool.
I'm Sushil. I'm the CEO of Drop, a micropayment company. Just in terms of background, I've been in the fintech financial services product business for the last 30 years. Specific to payments, in the early 2000s, I worked with JP Morgan Chase building one of the first peer-to-peer payment company called ReadyCash. And then fast forward 15 years later, payments have become exciting again. And we launched a product called Drop. It's a payment platform focused specifically on reducing transaction fees and making payments instantaneous, both on fiat and using crypto. Thanks for the invite.
Thanks, Sushil. Elisa.
Awesome. Hey, everybody. My name is Elisa DiCaprio. I work for Swift as head of industry engagement. And before that, I was chief economist at R3. So my remit at Swift is largely to work with central banks and to work with payment market infrastructures to increase the speed of payments, increase the transparency of payments, as well as building out digital public infrastructure.
Now, you guys just saw that. You guys just heard from all of those people sitting on Hedera Con stage talking about stablecoins and things like the integration of blockchain. Okay? Follow me on this. Follow me. But this next video is another clip from Hedera Con. Okay? Now we're talking about the institutional adoption of this technology. Understand, like I was telling y'all in another video, as far as where we are right now, this is retail money. Understand that. Understand that this is not true institutional adoption of this technology in this sector. Because once that happens, we're talking about trillions. Trillions. It's been talked about that this sector will be worth over $30 trillion by 2030. Understand what that means. For if you are a early mover in this space and you are coupling yourselves with things that are coupling itself with global standards, so that means as the institutions come in, that they have no choice but to go with the standard, which then has no other cause but the effect of the standard being tapped into. So as it's being tapped into and utilized globally, what that means for the network and processing of transactions throughout that network, and what powers the network. It is the token, whether that's Hedera or whether that is QNT or XRP or XLM or IOTA or Jasmy. Understand what is being laid out in front of you, please. But anyway, this ain't none of this financial advice. This is just me thinking, me seeing what's being laid out and was like, oh my gosh, like, I don't want to miss out on this opportunity. How can maybe I capitalize on this? That's all I'm saying. Not financial advice. I am just sharing my internal thoughts with the universe. That's it. But this next video, we're finna hop into it. Let's see what the institutions are feeling about this whole sector.
So how do those two things come together? What do you see in terms of the ability for enterprise to adopt this new technology? And if I direct that to you, Elisa, first, because Swift has this, probably the most glacial of change processes for obvious and obvious reasons. Where are you, as Swift, adapting or augmenting to incorporate this new technology?
Well, I'm gonna say there's really two levels of this. So the first level is internal, and the second level is external. So internally, right, we have message fields, we have things like this that need to be adjusted. So for example, if you're doing a cross-border payment, there's a drop-down currency menu. It's an ISO menu, it's not a Swift menu, but it doesn't have stablecoins in it. Yeah. So that needs to be adjusted. The size of the fields needs to be adjusted. Right now, well, we're in the process of making changes like this, but the size of the field will fit a BIC number. It won't fit a wallet address. So these are the kind of mechanical problems that we have to work through. So I think those are happening. Mm-hmm. And then the second level at which Swift works is with our with our banks, right? So Swift is just, we're the network, but really where the problems happen or where the changes happen is at the bank level. So a lot of what we're trying to do is make it easier for banks to then incorporate these new technologies and these new payment instruments. Yeah. So that's it's a combination of addressing the reasons for fragmentation, addressing the compliance issues. Compliance is hugely problematic for these banks because, of course, if you're using traditional rails, right, you have a certain way of doing compliance. If you're using stablecoins, you need to collect a different kind of data set. You need to know the person's mobile number. You need to know the place of residence. You need to know the place of birth. These are things that you don't collect in a normal bank transfer. So with compliance, that's a problem. We're trying to help our different banks deal with that. So I think it's really around these two levels. It's both internal, which is fairly straightforward because we're a company, you can change those things. And then it's external, which is how do you change all of the different nodes in your network and make it easier and less costly for them. As an example, right, there's 120 plus, somebody in this room knows this correct number, different wallet providers. If you're a bank, do you think you're going to integrate with 120 different wallet providers? Of course not. That is hugely expensive. But if we can provide a way that they can integrate maybe with an aggregator or some other way, then that would make it cheaper for them and make it more straightforward for the entire industry. So this is really where we're looking. We've done a lot of POCs, kind of live trials, to understand where the different pressure points are and where the frictions are and how they can be addressed.
Yeah. And 2025, you've got a lot of live trials coming up because we were talking
Absolutely.
to your team just last week, and some amazing stuff coming up. You next. The Swift network is world renowned for moving or messaging that enables money movement. Where are you seeing the key drivers for this shift to crypto payments?
I'm going to give you a very different answer.
Okay, cool.
So I think, from the perspective of cross-border wholesale payments, really where we see the drivers of stablecoins coming from is, first of all, just the existence of DeFi, right? So institutions, customers, clients, all of them see that it's possible to do instant payments. It's possible to do instant settlement. Why aren't we doing it in all of the different transactions that we have? So I would say that's very directly the first driver. And then the second driver, honestly, is really around the G20 goals. So the G20, which is only 19 countries, you're welcome, has a goal for 2027 that something like 75% of global payments are credited to the beneficiary's account in less than an hour. And so how do you do that with traditional payments? It's really challenging. So it's kind of straightforward. If you're doing this with digital assets, that works very well. If you're doing it with traditional payments, it's a little bit more difficult. So, one of the things that we find, for example, is that already 90% of payments are credited to the beneficiary bank in less than an hour, but then the actual account of the recipient, only 43% of those flows, 43% of the 90% are going into the beneficiary's account in less than an hour. And that's for reasons of batching, which you don't need to do with stablecoins. It's for a reason of closed payment systems. So maybe the payment went overseas, the system was closed at the time, so it's not going to get credited in an hour. And then different compliance features. So there's some jurisdictions, for example, where you need to pay the beneficiary before you actually credit the account. I'm sorry, you need to call the beneficiary before you actually credit the account. That's going to take you some time. So these are the two main drivers that we see from a wholesale cross-border payments perspective.
Cool, thank you.
Now you just heard about the institutions, okay? But follow me on this, y'all. Now we're gonna hear from the gentleman from WorldPay, which is one of the largest payment merchants in the world. Let's see how they feel about the technology and the implementation of the technology into their processes. Follow me what I'm telling you guys. And this gentleman sits on Hedera's governing council. As far as this company sits on Hedera's governing council. And this is one of the things that Hedera provides. Understand what's happening. But here we go. That next video.
We've got one of the biggest merchant networks in the world. Are you seeing demand from merchants to accept stablecoins? And are there kind of places in the world where it's more prevalent than others?
Yeah, I think it's like a very interesting topic to see. And I think a lot of people have different perspectives depending where they are in size, where they are in crypto native versus not. I would say the big learnings I've had or the big insights I've had is that global companies that do a lot of payments, sort of the gig economy giants that we know today, the Airbnb, the Ubers of the world, these are the types of companies where they have very complex payments that they have to constantly do on a regular basis. Think of every driver around the world, think of every host around the world. When you think of something like stablecoins, you start to now imagine a much better, more sophisticated payment system where you can pay people out globally instantaneously or close to instantaneously and really start to create this effect of a bunch of people around the world, businesses, individuals who want to hold cryptocurrency because of the advantages that they have. I think you also have this big interest and demand from capital-intensive businesses. So think your remittance companies, your money service businesses. I would say for the past few years, these companies have, in secret or in hidden in their back end, been using stablecoins to do things like FX and cross-border payments a lot more swiftly. But I would say from a crypto payment side, I get pitched a lot and I see a lot of data on luxury, airlines. These are all major verticals that people want to pay with crypto. I would say there's still probably a gap in terms of where merchants are seeing their consumers are in demand for it. But from like a pure technological advancement standpoint, I would say you want to pay out global suppliers, users almost instantaneously. Stablecoin tech is really what they're exploring today and what we're trying to help enable them with.
Now, you just heard from him. You just heard him talk about things like Airbnb. You heard him talk about things like Uber. Understand how many payments from those networks go out to the gig economy workers daily. Understand that. Because yes, some people have it set up to happen once a week, but then other people have it set up where they taking their money out every single night. Every night they're getting their money. So how many transactions is that globally? Understand what is happening right now and knowing about some of these entities that are helping facilitate and build out infrastructure for these transactions to take place for the next 60 years, something to pay attention to. But here we go. This very last video is coming from also Hedera Con, and it's going to be the representative from Swift talking about how important interoperability is going to be for this particular sector to actually thrive. Okay, follow me on this, okay? And standards. Understand what this means for Quant Network because they have a standard that has been in the works and still live and active for years in regards to exactly what this lady is getting ready to talk about. The challenges are in that sector for it to actually grow and flourish. Understand, y'all? That's all I'm saying. Just follow me on this. I won't hold y'all too much longer after this. Just here we go. The next video.
I love interoperability and standards. What more would you like to know? I'm kidding.
Where do we need, okay, to be a bit more pointy about it, what do we need to start with right now that will make the biggest change, and where's the low-hanging fruit?
Okay, so I think that's a good way to think about it. I think in standards, a lot of what I was talking about earlier is already well in motion, right? So for example, what kind of data are you collecting? What do you need? How are you doing compliance? How are regulators doing this? This is all in progress. I think the question of interoperability is a little bit more tricky, right? Because what we're seeing with stablecoins is this explosion of new types of financial instruments, which is fantastic, but it also increases complexity enormously. Yeah. And so how do you simplify that so you make sure that there's still a stable flow, right? And you make sure that everybody can access this, because right now that is definitely not the case, right? You certainly have different sectors that are using it heavily and some sectors that are not using it at all, but that should be using it. So I think in terms of, we've focused a lot on financial fragmentation and how to reduce that. And it's not just a story about one company doing it. It has to be a collaborative effort. One of the things that we're doing is working very heavily on digital public infrastructure. And this is interesting because this is the idea that you have institutions and you have governments which traditionally have not built payment rails, right? Payment rails are often built by the private sector and sort of backed up by the public sector. And now we see the public sector saying, oh, there's all these things going on. We actually have to be involved in this. And you see this movement of national payment systems, of different regulations about AI and DLT and stablecoins. And so how are all these things coming together? And so we're really working to collaborate with different institutions and different governance now on the public side to see how that can reduce some of the problems with interoperability that we have from this hugely fragmented sector.
Great, thank you.
So yes, you just heard her talk about how important interoperability is, how the standards tying into that will make the whole sector be. And we already know, you guys, follow me. Who is the king of interoperability? It is Quant Network with their patented technology, Overledger, that is tied to multiple global standards. Things like ISO TC 307. I'm gonna say it in every video because I really want to drum this in your heads because this is major information, you guys. Things like Secure Asset Transfer Protocol coming out of the IETF, which is an internet protocol. Things coming out of ANAPA, which is a blockchain global standard setting body. You have them working with people like the Bank of International Settlements, which is the central bank of central banks. They are the ones that create the rules so everybody else can kind of sort of fall in line so they can continue to do global commerce with each other, things like that. You have things like the central banks and the RLN, where you have multiple commercial banks come together and look it up, and they're listed as a technology provider. Understand what's going to happen when all of these things come out of the POC, which stands for proof of concept, and they move into a go live. Understand what that means for the utilization of the technology. Understand what that means for the companies that's being utilized, and understand what that means for the networks that are facilitating the transactions. This is incredible, you guys. And now it's like more and more, you're having major players in the world, like your Oracles, not just come out and say, we want this, like your Visas, like your MasterCards, but also have in some way or another coupled themselves with things like Quant Networks, ISO TC 307, or Quant Network and things like the RLN, which is the Regulated Liability Network, or Quant Network with the Regulated Settlement Network, or whatever, or Ripple, or whoever is a part of that. Understand what's happening, because proof of concepts that are successful turns into implementation of the technology globally. This is the reason why they are in that, just like I believe his name was Nader Sareed from BNY Mellon. It's just like he said that 2025 is the year where TradeFi and the distributed ledger technology sector literally start the process of coexisting as one. That bridge is happening. And who is the king of all bridges, the API of all APIs, and the gateway of all gateways? Quant Networks Overledger. Overledger, their software as a service. Understand what's happening. But until all this plays out, and I know this was a long video, but if you rock with me all the way to the end, I want y'all to type into the comment section, Hedera. That way I know you made it all the way to the end of this video. And then to the next time, y'all already know. Yo, boy, appreciate y'all. For sure. All right, now. Peace out.